Hello everyone, it is Sunday, November 14th, and this is episode 38 of Odds Are, your S&P 500 weekly market forecast. All right, let's take a look at last week. So if you remember, we made a pretty bold claim. We said that there was an 89% chance that we were not going to close above the 47.36 level, which was really not that high compared to like where we were at in that week. You know, the market just seemed to keep going up and up and up with no end in sight, and we called that we would not close above that 47.35 level, and sure enough, we did not. Another thing that happened was we did not have a breach of either of the breach points. So that means that we're set up for a pretty high probability trade in this week coming up. A little bit more on that in just a bit. But looking at the chart here, we closed within the expected settlement range. So no surprise there since we didn't even have a breach of one of the breach points. And we stayed above the red midline of the Bollinger Band. So kind of like made a move towards it, didn't really come down to touch it, and stayed in that range. Of course, nowhere near the parabolic SAR, and that leads us now into the moving averages. All right, for moving averages, we are still bullish across all three terms, short term, medium term, and long term. No real surprise there. And now looking at what we're expecting for next week, you can see we have breach points now. The breach points have kind of, squeezed in, obviously, because we didn't have a breach last week. So not a lot of volatility. And so the breach points then respond accordingly. So now we're looking at breach points at 46.35 to the downside and 47.17 to the top side. But notice the percentage. The odds of a breach are 98.48%. So that is a very, very high probability trade there for you guys. If you are interested in buying some, options, so you could potentially set up a position on here, a spread where you'd be basically buying the call. You could buy like a 47.15 call and also buying a 46.35 put. That would technically be considered a long strangle because you're buying the call and the put outside of the money. But that's getting a little bit too much into the details of that trade. Looking at the expected settlement range, we are looking at a range between 45.53 and 47.63 to close by the end of the week. And the parabolic SAR is now up to 42.76, still way outside of the range of what we're expecting to settle within. So not really looking for anything even close to that 42.76 this week. All right, let's wrap it all up together into the relative view. So again, this looks very similar actually to last week's, except everything is kind of compressed just a bit because there wasn't a really big change, from relatively speaking from where we started the week to where we ended the week. So all in all, the volatility is kind of just like tapered off a bit, especially when it comes to these breach points and the expected settlement range. Looking at this, I still think, looking at that red midline, we have not touched it in quite a while. So that might be something to look forward to this week. So given that, if you're looking at the high probability trade of a breach, 46.35 looks a lot more tempting to me because it's in the direction of that red midline, which looks like we're about due to touch. And looking at that parabolic SAR, again, still nowhere in the range, so not even really factoring it. All right, didn't see that one coming. All right, so 2 weeks now, back to back, we have two high probability trades. So for me, I consider high probability trade anything over 85%. That's high probability. And normally we have about an 81% chance on the breaches, but again, they're not directional. In this situation, we have a 98% chance that we're going to, 98.5% chance that we're going to have a breach. So that's a high probability trade. And we're just coming off of an 89% probability trade that we were not going to close above that 47.35. So if you didn't catch last week's, hopefully this week you can take advantage of this high probability trade and don't say you didn't see this one coming. All right, and wrapping up with the quote of the week. This one is by Mr. Mark Douglas. He is the author of Trading in the Zone. And Mr. Douglas says, "The hard, cold reality of trading is that every trade has an uncertain outcome." And we intuitively know this, or at least we should know this. Nobody, unless you have your insider trading and you have information that nobody else should have, no one should go into a trade believing that there is no way they could be wrong. I mean, that's recipe for disaster, right? So it's interesting because this quote stuck out to me because that's what we live in. We live in the uncertainty of these outcomes. We live in the uncertainty of the trades. And in that respect, it's very similar to how, every day of our lives really play out. There's always going to be a certain level of uncertainty. But that doesn't mean that you stay cooped up at home and you fear, facing the outside world. Just like in trading, just because there is uncertainty in the outcomes does not mean that there isn't a solid, logical, and profitable way to attack these markets, right? So just like in life, you can have success. You can pursue what you want. And it does take work. It does take sacrifice. You may have some bumps along the way, but just like in life, the markets have uncertain outcomes, but they can also be very, very rewarding. So just, hopefully that encourages some of you guys out there. I know that for me, I love dealing in those uncertain outcomes because that's where, you start getting into the odds. What are the odds of things happening? And if you can find those things that have a high probability of being right and you do that over and over again, then guess what? Eventually it's going to work in your favor. And if I didn't believe that, I wouldn't be recording these shows. So you guys have a great week. I will see you guys here next Sunday. Take care.